Okay, welcome everyone. Let's get right into the stock market technical analysis charts. We're going to try to find trade ideas. And again, I always like to give my, my read on the market where I think we're going in the mid, short to mid term. And then we look for individual trade ideas. Everything's about trying to make some money here. So guys, drop me a thumbs up if you're finding value in my channel. And if you're new, check out my stock market technical analysis course. It's not a free course, but it's about 4 to 5 hours of video training, and I priced it at 99 bucks. I think it's affordable for all, and I want to keep it that way. Okay, so check that out, link in the description below. All right, triple Q's tech stock. So, really, we'll just start out with the bigger picture, looking at the daily chart. I know my chart looks like a big mess, but that's because, we're analyzing these charts in real time as it goes along. Bigger picture, though, as far as I can tell, we've got a downtrend. We are continuing to move lower. Here's our first big leg lower. We had the counter trend bounce. If you followed my channel, I talked about getting short again on the March 29th. This is where I shorted at, and it's been down ever since. I put out a video on April 7th, and if you look at that thumbnail, it says down we go, basically. And when I put out videos that say like more downside, down we go, it's only because I think that we're going to continue to go lower over time. And I get a lot of comments on those days like, oh, he's putting out clickbait, we're rallying right off the lows, right? When he puts out something with clickbait thing, we rally. No, that's not true. Maybe in that hour or the few hours following the video, maybe you rally. But ultimately, I'm looking at the bigger picture, and you can see here from April 7th, down we've gone, all right? We're down from that point, from the close there. We are down, 3% on the triple Qs. So when I put those videos out, my thumbnails, if I think there's more downside, I usually try to put out something in the thumbnail. If I think there's going to be a rally or a bounce or something, I try to throw it in the thumbnail. Yeah, looking for more downside from here. So we are just going lower. We're at some support. There's definitely a little bit of support here at 342.35. We'll see what, if we hold this. Looking at the hourly chart, we did run up and fill the gap. It didn't quite fill, but there was this gap, and I talked about this yesterday, how I thought we might rally and fill this gap at 348.50. Today, they rallied it up, and we got about 347.80. All right, so about 70 cents off. The seller stepped in early, which to me shows that this market is weak, that when you have sellers looking to sell any little rally and not even letting it fill the gap, and they start selling, that's weak. So there it is. That's, for all intents and purposes, that's a gap fill. We got within 70 cents, and on a $340 instrument, that's basically a gap fill. So that was that. And I think we're heading lower from here. So looking for lower prices. Most likely, at this point, I don't see much support, at least decent support, till we get down here at the lows. This is the next area where the bulls will probably really try to fight. 318.40, somewhere right down in there. And I don't see anything really stopping us from going much lower until we get down there. So that's what I got in the short term. Looking for more downside. IWM, small caps, again, just, little bit. IWM's actually been a little stronger than the tech sector. But ultimately, if we're going to head lower in tech, IWM will sell off as well. So going to the daily chart, again, we're just a little counter trend bounce today, but being sold into. And I think we're heading lower. Next area of support I don't see until we get down to about 188. All right, so that's the near-term target. I think we'll break that level and actually head lower, but that is support. So until you see the break, that should hold. XLF, I think when you see this one start to break, this 37 area, this is your financials, then that's going to be a signal that will probably start making the selling will intensify, because right now, this is kind of a defensive sector a little bit with the interest rates rising. People have been thinking this is going to benefit, but we start breaking here, and it should be lights out for the market basically, and we should start to really break down to these key levels that we've been looking for. Gold starting to break out today. We'll see how we close the day. But if I look at the daily chart, really we've had some resistance right in this area about 1960. today breaking out, and so far we're above. So the bigger the close above that level, if we close at the highs or something like that, the better as a buy signal, all right, and a breakout for the next move higher. One thing I don't, this looks good, I think, in the short term. We'll see where we close at. And if we do get that breakout, then we're probably going to move up to the highs at 2073. So just keep an eye on that. The miners still have that negative divergence. You can see right here on the daily, we just moved the divergence up like that. We're making a new high in price, and yet the miners continue to have the negative divergence. So a little bit of pause and hesitation on that. I don't like to see that divergence. What I'd want to see is a big, strong, bullish day in the miners and take out the divergence. All right, and just do something like that. And in a strong bull trend, you often will take out divergences. So that's the way I'm leaning right now. I think we are going to break out in the miners to the upside just because gold looks to be breaking out. But again, kind of want to watch those together and see how, if gold can get that breakout and continue to power on, the miners should do the same and take out these divergences. And that would be very bullish because you had a bearish setup and yet they burned through that. So keep an eye on that. Oil having a really strong day today, up almost 7%. That's a pretty good sized day in oil. This is the oil futures. So we'll see where we go on this. Again, I'm not really bearish on oil. I don't see anything that I really want to short on. I mean, we've had this uptrend here. We did break it, but without any real divergences showing up. So ultimately, I think oil is going to continue to power on. And, like DVN, something I'm looking to short, but again, we've never had a sell signal. So there's no reason to short it. And I know there's a couple people that said they were shorting it. They kind of jumped the gun. And, I just don't do that. For the most part, I wait for the sell signal. That's part of the discipline you got to have, is waiting for the sell signal because we don't know how long this can run to the upside. There is negative divergence in oil, and you're making this bearish rising wedge. So you definitely have a bearish setup, but we don't have a sell signal. The sell signal is a break of the trend line. Nice big impulsive breakdown, red candle, breaking the trend line, maybe a gap down, and something like that. We don't have that. So you never know. This could continue to power on and burn through the divergences as well, So that's why we don't take a short just because you have divergence. It's just merely a setup and we wait for the trigger, which is the sell signal. I teach all these concepts step by step in my course. I break out a checklist for you guys to use to help you with really analyzing trades. So check that out. A lot of value there. UPS, this is a short trade that I pointed out back here on April. I think I got to it on April 5th when we had that initial sell signal. So that was your sell signal on UPS. Again, we had this uptrend line right here. We broke trend, all right? Nice impulsive red candle breakdown. We had negative divergence in place, so the setup was there, and then you got the trigger, the sell signal. And it's been down ever since with a little bit of counter trend rally down. All right, I did talk about how I thought we'd rally back up, do a little back test of this resistance line, which we did yesterday. And we should continue lower now. So I don't see anything holding this thing up till we get to the next support level, 177. We've got earnings coming up relatively soon, but again, this can probably trade down to this level before those earnings. So 177.20 area is my next level of support. Good support there. So that's likely a good area to at least cover a short position and maybe let earnings clear out of the way. And we'll just kind of reassess it after that. This is something to keep an eye on, XLV. So the healthcare sector has been a strong sector in this market. You've got a lot of people hiding out in these defensive stocks, which is healthcare. And so we're not, and this is the second largest market weighting or sector in the S&P 500. Tech's the largest and healthcare is the second largest. So that's been kind of holding the S&P 500 up. If we start to see healthcare selling off and with tech, we should see a general market sell off as well. So something that I'm looking for is, you can see right now, we just made a new higher high than the former high right here. So we made a new slightly higher high, and yet we've got negative divergence. There it is. All right, there's your former high, and you can see we've already put in a new peak on the RSI, so we're starting to confirm that negative divergence. The PPO has an, kind of an equal high right here, I believe. There's a high and there's basically an equal high, but higher high in price. So price made a slightly newer high, but momentum made an equal high in the PPO and a lower high in the RSI. That's negative divergence, bearish divergence. Doesn't mean that we have a complete sell signal, but it does, there definitely is a setup here for downside move in XLV. Also, we've got this trend line that I'd been watching right here where we had some support. We hit it again from support. And then it was resistance, resistance, resistance. Little pop breakout with a divergent high, and we failed, and we're back below that resistance line right there. So I see some bearish, price action. This looks like a bearish chart to me. So I'm looking for more downside in XLV. So I'll probably start scouring around some of these healthcare stocks and see if we have any short trades that are lining up. Now, they're not going to be as good as a tech short because they're more defensive. But again, if we can find some good setups, we'll keep an eye out for those. Support on XLV, you got good support right down here at this 125 area. You can see that was resistance through here. There's a support, hit it again. So that's the strong support. And you got the 200. So if we're going to come down, you're going to probably battle with the 200 a little bit and then roll down. And then we'll see. We'll see how things look when we're down here, or if we get down here. And I'll wrap up with Tesla here. So again, we had a really strong counter trend rally on Tesla right into major resistance right up here at about 1,112. You can see on the daily chart that was big support for a while. So this is your uptrend. We were holding support, finally broke support, drifted sideways to lower, had a big counter trend rally, kind of a bear market rally, and we shorted it right into that resistance right there. Also, this little high, this little popping high right here, where it made it look like we were going to recover that support, was negative divergence. You can see it. If I mark it out right there, it basically made a equal high in the RSI, but a higher high in price. So started to put in that negative divergence. The other thing I want to point out on Tesla, and I've talked about this on past videos, I'm looking at the hourly chart here. So we gapped up back here on March 25th, it looks like. And we basically were trading up here, and I talked about the potential for a island cluster top. That is where you basically gap up, create a cluster of candles, and then gap down to kind of create this island top, a floating top. And sure enough, we do actually have that. You can see basically there was a gap up here. There we did, this one wasn't really a gap down. It still kind of connected here, but right here, we actually did gap down right there. We gapped from here down to here. And as you can see, if I roll out and look at where the island where we gapped up from, it pretty much connects exactly that. So as far as I can tell, we basically gapped down, created that island cluster top, rallied up, kind of back tested that gap area, and it's holding as resistance. All right, so right now I see that as resistance, 1,010. 1,011, somewhere right in there. And I'm looking for lower prices now in Tesla. So keep an eye on that. We do have earnings coming up next Wednesday. So this thing might want to drift sideways. But I guess if I had to put my money on it, which I am because I am short on Tesla, then I would suspect we're going to have a bad earnings and the market's going to sell down on earnings. Maybe it doesn't do it before. Maybe we just drift sideways, but that's the way I'm leaning on this. So looking for more downside in Tesla. Guys, thank you for joining along. Drop me a thumbs up on your way out, and I'll catch you on the next video.